Welcome in. I am the CryptoBullGod, and in today's video, we're not discussing bullish divergence. We're discussing historical bullish divergence in the Bitcoin chart. If you appreciate the content, make sure to give me a thumbs up, subscribe to the channel, and click the bell icon for notifications, and drop me a comment. You can find me on Twitter. You can find me on YouTube. You can find me on Tradingview. You can even find me on Instagram at CryptoBullGod. Just a quick disclosure that none of what I'm sharing is financial advice. I'm looking to simply educate and to help others through sound technical analysis. We're all big boys and big girls, and we can make our own personal financial decisions. So with that being said, let's get into it. Now, actually, before we get into the bullish divergence that I wanted to discuss with you guys, I actually wanted to take a look at the weekly. Okay, and as you can see, Bitcoin's price right now is 16,000, roughly 800. Okay, our prior low here that we hit back in June was roughly 17,600. So I really want you to pay attention to how our Sunday candlestick closes, and let me explain why. I will be here tomorrow for the live stream to discuss how markets close out. But regardless, I really want you to pay attention, because if we can close at or above 17,600, which at this point is a big ask, okay? We'd have to go up $800 in price. Not impossible. Bitcoin shocks us all the time, but it's looking less probable, okay? But if we close at or above 17,600, I would say that the odds are in our favor that we'll see continued movement to the upside. If we close below 17,600, I think the odds are against us in terms of moving up, and we're going to see some more downside volatility. Okay. Another way to state that is the odds have increased that we could see further downside, but below the lows that we hit this week at 15,600. That's a better way to word it. So it's all about probabilities, right? On this channel, I never state certainties. And one of the things we have to understand, given the current market conditions, is that because we broke below 17,600, it has increased the odds that we're going to see continued price movement further down below, right? Until we start to reestablish ourselves and we see signs of higher highs and higher lows, there's an increased risk that we're going to see further downside towards lower targets, right? So we really would like to see this weekly close at 17,600 or above to increase the odds that we would see some continued upside, okay? Now, I'm going to now get into the historical bullish divergence that I've been looking at on the Bitcoin chart, and I've actually shared on Twitter. But I did want to share with everyone, there is one other key chart, one other extremely important chart that I am laser focused in on and that I will be releasing a video on. And that chart will be an extremely good indicator to tell us if we're going to see a massive trend reversal to the upside, or if we can expect chippy-choppy price action for many months, many months, until we can actually sustain levels at 20,000 or 30,000 and above, okay? So stay tuned for a video that I'm putting out later this week because that chart is extremely important to pay attention to. With that being said, let's take a look at this bullish divergence that I've been speaking to on Twitter. Now, this is a 3-day chart. We can put this on a 4-day. We could put this on a 5-day. I will look at this on a weekly with you guys. But what's happening here on every single time frame that we're looking at is essentially, I mean, the arrows depict it. Price action is moving down, but yet strength is building up in the price. This is what's known as bullish divergence. So even though the price is decreasing in value, the relative strength, which is a momentum indicator, is actually increasing. And what tends to happen in these situations is we tend to see a pop to the upside, whether it's short-term rally and price relief or whether it's something much bigger than that. That is to be assessed after the fact. But again, no certainties, but it's telling us that there's an increased probability that eventually we're going to see a pop to the upside. Now, why is this bullish divergence on the RSI, why is it historical? Because that's what I said, okay? Let's go back in time and let's actually look at the times that we've seen bullish divergence on the RSI on the 3-day chart. You can see that we saw it back here, excuse me. You can see that we saw it back here in the summer of 2021. Price was declining, bullish divergence, and we saw a pop to the upside. We hadn't seen it again Okay, prior to that, until 2018 and 19, when we saw this massive move down, as price was declining, RSI was just increasing and increasing and increasing and increasing, and eventually we popped up and went up towards 14,000 in the summer of 2019. I remember that very, very well. It's funny, if you've been here long enough, you can remember certain points in time where there was significant price action within the Bitcoin chart, and you know exactly where you were at, right? I've just been studying this market extremely hard and relentlessly for myself, and now I can share that information with you. But I'm very passionate about the space, and so I can just remember certain times in my life where I was at with significant price moves. By the way, if you appreciate the content, make sure to hit the thumbs up button, drop me a comment, and subscribe to the channel. Let's get into the longest length of time that we're now challenging with the bullish divergence on the 3-day. You can see here, RSI was increasing in value the entire time as price was going down, right? And then eventually we broke out and went up into a massive bull market in 2016, going into 2017, right? So, and this bullish divergence, this lasted from October of 14 all the way until roughly September of 15. So this was nearly an 11-month bullish divergence that showed up in the chart. We've now created, okay, with our current bullish divergence on the 3-day, we've now, because this is actually longer than back in 18 and 19, this has existed since June all the way up until the present day of November. So this has been in existence for 5 months, okay? So we now have a time period that is less than 2014 and 15 being, what did I say? It was 11 months. This has been 5 months, but it's still the second longest standing period of time where there's been bullish divergence on the RSI on the 3-day. It's something, again, guys, I know that it's challenging right now to feed into your emotions, but the best thing that you can do to remain level-headed and to not make financial blunders and mistakes with decisions you're making on buying or selling something is to remain unemotional and allow the charts to dictate what's going on. Because ultimately, even though, as I've argued this week, that what has happened has truly, in my opinion, been a black swan event with FTX, it does not change anything. It does not change anything that all of this stuff here, all this data, all this historical data, the mathematics and analytics behind it, it allows us to still make probabilistic statements regarding future price action. So don't lose sight of that, no matter how emotional you are. But there's something else I want to look at on the weekly, and this would be another reason why it would be nice to close around 17,500, 600, is right now, the other thing that we have going on here, let's draw this line black, okay? In addition, you can see there's bullish divergence here on the RSI, right? We would draw it a little bit differently, but you can see that RSI is increasing as price has been going down, right? Same sort of thing. I could show you multiple time frames. It's the same story. But the other thing that's going on here is that we could potentially be seeing a falling wedge playing out. Now let me explain to you how I'm drawing this, okay? Let's get off the indicator. So what I want a couple touches here. So I have touches here, I have a touch here. Now this, right now, because the body is going through the formation of the falling wedge, this is an invalid pattern as it stands on Saturday, November 12th at 5 p.m. Eastern Standard Time. Okay, so this is an invalid pattern, but guess what? We still have another 26 hours to change this story. So if this candle closes anywhere like it is right now, we don't have a falling wedge. But if we can manage to close around 17,600, okay, we would still be within this falling wedge. And what is a falling wedge for those unfamiliar? This is actually a bullish pattern, okay? We start real wide up here, and then it gets real narrow in here. Price is declining. On top of that, we have bullish divergence on multiple time frames, including the weekly. This would actually signal again, price movement up. Whether it's a dead cat bounce and it's a short-term relief rally or something greater, we'd have to assess it at that time if the pattern breaks out. But for now, the way that I have this drawn, you know, you'd be looking at a target roughly And I really should redraw this since it's on the weekly. Apologies. So really, I want to make this as accurate as possible right there. So if we draw the pattern, this is how you do it. From the bottom up to the top. And then what you do is you take that arrow and at the point of breakout. So let's assume that we break out, I don't know, the first week of December, okay? That would put our target right around 28,700, okay? 28. And that would, you know, it's interesting that that's our target because something I've been hammering home on is that the real big target I'm going to be eyeing, okay, once price at some point does break 25,000, is I'm eyeing that $28,000 to $32,000 area, okay? So again, try your best because it's only going to benefit you to put emotions aside. Allow the charts to speak to you. Utilize myself and other value-added technicians in this space and formulate your own opinions. By the way, not only if you appreciate the content, but something a little bit different in the comments feed. Let me know if you agree or disagree with my analysis and why. Because everything that I'm pointing out to you is factual in the chart. But I'm very open to hearing other people's opinions and views on things. But again, I'm not giving you my emotional view on anything. Okay, the bears are unfortunately very much in control right now. Okay, and the bulls have to change that story. We ideally would like this weekly to close at 17,600 or above. We're in a potential falling wedge. Okay, if we can close at 17,600 on the weekly, we have massive bullish divergence that's historical, that's building in the RSI on multiple time frames: daily, 2-day, 3-day, 4-day, 5-day. I've looked at it all, 7-day. Okay, so we just have to remain patient, and as difficult as it is, and allow price and data to play out. Okay, and at that point, reassess things as things develop. This week coming up is a very big week. So again, make sure that you subscribe to the channel and be notified when I go live. I've been going live a lot. I'm going to be doing the Bitcoin Crypto Weekly Close. There's a very, very important TA video I'm going to be putting out this week. It's one chart that you really need to focus on. This chart will tell you the highest probability associated with a key trend reversal and us moving up going into 2023, which has been my hypothesis, or if there's a higher probability for price to continue down and be chippy choppy for many, many months until we can get out of there many, many months out down the road. So stay tuned for that video. Again, if you appreciate the content, share this with at least one person. And until next time, spread awareness and carry the education forward.
So what you gonna do, $dollar, on CryptoBullGod and his crypto maniacs and the entire cryptocurrency market? Run wild!